In particular, when you look at what's happening in countries like Canada and Mexico, who have a very significant level of trade exposure, and in particular trade exposure to the United States, the implications are potentially very significant. And in the US as well, what we see is that the sort of policy measures being pursued at the moment are likely to lead to increases in production costs as well as costs of consumption. So lower global growth and higher inflation will also have flow-on consequences in the United States.
And speaking of the United States, in the economic outlook, you're actually suggesting that growth will slow down also in the US economy, 2.2% in 25 and 1.6% for 2026. Do you have any estimates, any ideas of where U.S. economic growth could be if these trade tariffs had not been announced?
Well, we're indicating that, by way of upside risk, if those measures were reversed, it would certainly have a positive impact on global growth and hence on growth in the United States, and in particular, even have a stronger impact in countries like Mexico and Canada.
Let's talk about the European Union as well. Thinking about the economic outlook for the euro area, where are the economic pressures coming from?
Obviously, right now, we've got a war in Ukraine. We've got conflicts in the Middle East. We've got, we've gone through a period of, very significant high inflation and economic adjustments that have followed from that. I mean, in all of the circumstances, global growth and economic growth in Europe has been comparatively resilient, but there are some competitiveness challenges and some structural challenges that will need to be addressed in Europe in order to boost medium to long-term growth.
They have announced, however, a lot of money going into defense. From your economic projections, do you think that this additional spending on defense is going to be a positive for the economy or not?
Well, increased investment, in defense and infrastructure and in other areas will have a positive effect on economic growth, no question.
Thinking about this additional spending, the reason why I'm asking whether this could be there could be some economic ramifications here is that we actually saw bond markets putting higher yields for European government bonds as a result of these announcements. So I'm wondering whether there's pressures here on the fiscal policy going forward for Eurozone countries as they're spending more on defense.
Well, I mean, I think that at the moment there's a lot of different moving parts that are impacting on pricing in the markets, including market perceptions on what will be happening on the trade front, as well as, of course, some of the developments that you mentioned, and that is being reflected in some of the pricing developments that we're seeing.
Thinking about inflation dynamics here, the economic outlook suggests that there will be higher moves in inflation. I would like to understand where that's coming from, whether this is perhaps coming from energy prices from a Eurozone perspective, or whether this is once again related to trade.
Well, so what we see is that inflation will continue to go down, but that inflation is expected to go down more slowly. And I mean, to a degree, I mean, that is, what we see in the data coming through. And certainly, I mean, what we are suggesting is that some of the measures in relation to trade, some of the measures in relation to tariffs and the related policy uncertainty certainly are having an impact on inflation. And that is indeed reflected in our projections.
So what should be the message for central bankers at this stage? It seems that they have a very hard task right now in controlling inflation amid all of this uncertainty.
Well, I mean, central bankers should continue to remain vigilant. Of course, they will be reviewing the data coming through. Certainly, if inflation expectations remain anchored, we do believe that in major economies like the United States and the United Kingdom, there is scope for further policy easing, but it is certainly true that the downward momentum on inflation has slowed, and in fact that we've seen recent upticks in inflation in a number of economies.
Given that you have mentioned the UK economy there, I would like to understand also what is the outlook for the UK economy from your perspective at this stage?
Well, I mean, we are expecting that the UK economy will continue to grow, but will grow more slowly than what had previously been anticipated in our December outlook.
Very well. Before I let you go, I would like to understand also what are the dynamics in other parts of the world. Thinking about China, the role that China plays in the global economy, what are you seeing there? Because the latest economic data we obtained this morning actually points to a stronger Chinese consumer, which is a total different story from what we're getting from the United States.
Well, I mean, the Chinese economy is growing more slowly than what it has in the past, but continues to grow, materially above the global growth average. But I mean, there are some structural challenges in the Chinese economy that will need to continue to be addressed. But what we're obviously also seeing is that over time, China will be impacted by what is happening in terms of global trade policy settings.
So to conclude our conversation, what is your message to Donald Trump, the President of the United States, given that you are suggesting that these trade tariffs he has imposed are the biggest economic headache for the global economy?
Look, I mean, our message to governments all around the world, respecting the right, of course, of democratically elected governments to make judgments on behalf of the countries they represent. I mean, our message to governments all around the world is that it will be important for future growth and for future increases in incomes and living standards. It will be important to keep markets open. It will be important to have well-functioning global markets and a rules-based trading system in good working order. And to the extent that there are issues in the way the global trading system operates, that those issues are best resolved through dialogue and international cooperation rather than through unilateral measures. So we would encourage everyone to engage with each other and to honestly and openly work through the issues at hand and try and find the best possible way forward without having to resort to tariffs and other trade restricting measures.